This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending February 19th, 2022. Our question this week is there a money heaven? The answer will be provided later in the video. This week, the market ended lower. The Dow Jones Industrial Average decreased minus 0.68% on Friday and was down minus 1.9% for the week. The S&P 500 decreased minus 0.72% on Friday and was down minus 1.58% for the week. The Nasdaq decreased minus 1.23% on Friday and was down minus 1.76% for the week. Looking at the week, we can see that there were 4 up finishes versus 11 down finishes for the major indexes. On Monday, all 3 major indexes finished down. On Tuesday, they all finished up. On Wednesday, the Dow Jones Industrial Average and the Nasdaq finished down, while the S&P 500 finished up. On Thursday and Friday, again, they all finished down. The new unemployment claims were 248,000 versus 219,000 expected. January home sales jumped 6.7%. The average size of a new mortgage climbed to 4.05%. Lumber prices added nearly $19,000 to the cost of a new home. Retail sales surged 3.8% in January. Wholesale prices rose nearly 9.7% over the past year, and U.S. import prices increased 2% in January. New unemployment claims, home sales increasing, the size of new mortgages, lumber prices, retail sales surging, wholesale price increasing year over year, and U.S. import prices rising are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. Is there a money heaven? No. Despite the idiom, pennies from heaven, which means receiving unexpected good luck or good fortune, pennies nor money of any kind ever falls from heaven, nor does money ever go to heaven. Hundreds of billions of dollars trade in and out of the stock market, the commodities market, and the bond market every day. Money moves from one market to another market and into real estate and other investments on a daily basis. And sometimes money moves to the sidelines. That is, investors stop investing and they hold their money so that they can invest on another day. But money never, ever goes to heaven. When money leaves the stock market, the market will generally go down. And when money moves back into the stock market will generally go up. Where do you think money goes when it leaves the stock market? Do you have an opinion? Do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it's not your fault. Because it was not taught to you in school, you are going to have to teach yourself if you ever want to learn how to get wealth and income through the stock market. You must. R RSI. That is Read, Save, and Invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor. And they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing. Books that you can borrow from the library or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is my trading watch list from the week ending February 19th, 2022. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Gold Shares ETF, ticker symbol GLD. It's in the first column. It increased 1.9% for the week, but was down minus 0.17% on Friday. Gold Shares ETF offers investors a cost-efficient and secure way to access the gold market. Gold Shares represents fractional, undivided, beneficial ownership interest in the trust's sole assets, which are gold bullion and from time to time cash. Looking at a summary of results, you can see that GLD has increased 3.6% year to date. I did not generate cash flow from GLD this past week, but I have generated cash flow from it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow. That is trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing in or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio is not outperforming the S&P 500 index ETF SPY so far in 2022. The Southside portfolio is down minus 17.28% versus minus 8.58% down for SPY, a difference of 8.7%. The Southside is losing to SPY by more than 8.5%. The primary reason the portfolio is losing is that the Southside is heavily invested in Bitcoin, and Bitcoin continues to be in a bear market. Will it bounce back in 2022? Stay tuned to find out what happens to Bitcoin and what happens to the Southside portfolio. The portfolio will remain heavily invested in Bitcoin. The portfolio is 81.88% in a Bitcoin trust. Equities, including puts, calls, and ETFs, make up 5.9% of the portfolio. Cash is 12.22%. The cash flow generated for this week was 0.82% of the portfolio account value. The account value changed by minus 6.87%. Meanwhile, the S&P 500 ETF SPY changed by minus 1.41%. I sold option contracts on 2 positions this week. They were both puts that ranged from $254.40 to $410.76. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. Check out past videos for other questions of the week. They are listed in the description section. Please like, share, and subscribe.